Right, so that's the economic impact of energy prices that have been volatile since the war began. But now let's shift focus to China. Now, China's central bank has significantly increased its gold buying efforts. That's marking 17 consecutive months of accumulation through March 2026. This increase comes as the Iran war intensified through March that impacted gold prices. Now, during the war month, the People's Bank of China bought the most gold in more than a year. As prices come under pressure amid the Iran war, China's buying demonstrates that a key pillar of support for the precious metal that remains intact. While traditional safe haven demand often boosts gold prices, the ongoing conflict has coincided with intense volatility. That caused gold prices to sink 12% in March. That's the worst monthly performance since 2008. China has used that crash in price to add to its holdings. The country's aggressive purchases are widely seen as a long-term strategic move. This is to diversify its foreign exchange reserves away from dollar assets. After gold prices notched a record just below $5,600 in late January, the metal has seen a steady decline to trade under $5,000 mark. Beijing added 160,000 troy ounces, or roughly about 5 tons, to its holdings last month. China's total reserves have now surpassed 74 million ounces. That's taking its total worth to over $367 billion. This comes at a time when some other central banks have turned to sales. In March, Turkey's central bank sold and swapped about 60 tons to defend the lira. Some central banks have also paused gold purchases due to price volatility. Still, physical demand for gold in Asia, that has remained high. Premiums in Shanghai jumping as the country braces for economic impacts. Analysts suggest that if the West Asia conflict continues, safe haven demand will remain, and that will likely keep gold prices supported in the long term. That's despite the short-term dips.